Good morning, ladies and gentlemen. First, we would like to extend a warm welcome to all of you who have joined us today for our 2026 first half results presentation. As is customary, we will follow the traditional structure of our events. We are going to begin with an overview of the results and the key developments during the period. The presentation, the Q&A part, will be delivered by the top executive team joining us today. Mr. Ignacio Galán, Executive Chairman, Mr. Pedro Azagra, CEO, and finally, Mr. Pepe Sainz, CFO. After the presentation, we'll move on to the Q&A session. I would like to remind you that we will only be taking questions submitted through our website. Please send your question exclusively via www.iberdrola.com. Finally, we expect that today's event to last no more than 60 minutes. Should any question remain unanswered, the IR team will, as always, remain fully at your disposal. We hope that this presentation will be useful and informative for all of you. Now, without further ado, I would like to hand the floor over to Mr. Ignacio Galán. Thank you once again. Please, Mr. Galán.
Thank you very much, Ignacio. Good morning, everyone, and thank you very much for joining today's conference call. In the first half 2026, reported net profit increased by 22%, reaching 4,336 million euros, and adjusted net profit up 8% to 3,565 million, reflecting a strong operating performance up to June. Adjusted EBITDA rose by 7% to more than 8 billion euros, driven by networks up 13% due to tariff increases and higher asset base in all geographies. Adjusted EBITDA in power and customer increased 1% due to higher production and margin, especially in the second quarter, and the contribution of panel storage, which already accounts 35% in our total hydro generation. Investment rose by 25% to more than 7 billion, with 72% allocated to UK, the US, and Brazil, including the acquisition of Neoenergia minorities. Networks accounted for two-thirds of the total investment, driving 11% increase in our regulated asset base to 55 billion euros. In power customers, up to June, we have commissioned 1,600 additional megawatts, and we are accelerating the addition of new capacity due to increasing demand across our geographies, especially in the US. This is also driving governments and regulators to approve new framework to guarantee the availability and sufficient power and the reliability of transmission and distribution networks. In Europe, in the last week, the Commission has published the Greece package to increase networks investment, as well as several initiatives to reduce taxation on electricity and a new electrification action plan, with very ambitious targets to double electrification rates. The UK also continues showing full commitment to electrification, with increasing visibility on the need of additional investment in transmission and distribution, supported by attractive remuneration schemes. Finally, in Brazil, the renewal of distribution concession for 30 more years was signed, reaffirming the country's attractive regulatory outlook for the coming years, and supporting our recent acquisition of Neoenergia minorities for 1.1 billion euros, as mentioned. In this context, our increasing investment during the first half, we have also continued preserving our financial strength with an FFO to adjusted net debt ratio of 22.4% and a liquidity of more than 21 billion euros. As you know, yesterday we announced the acquisition of Caruna Networks, the largest electricity distribution company in Finland, with an enterprise value of 5 billion. Under the agreement, we will acquire 80% of the equity Caruna for 2 billion euros, which 1 billion will be paid in 30 months, and the remaining 20 billion stake will continue in hands of two Nordic investment and pension funds. Caruna operates two distribution areas with major activities around Helsinki, the main development area in Finland, and Joensuu. In total, Caruna has 89,000 kilometers of line, almost 70% underground. The transaction that we expect to close in the first quarter 2027 perfectly fits our strategic focus on regulated networks. With the recent investment of our remaining Mexican power plant, we will be exchanging thermal generation for fully regulated company within an asset base of 2.5 billion euros. That serves to more than 20% of the electricity distribution in Finland, a country with AA+ rating in the Eurozone. with a stable regulation and a strong demand growth prospect, given the ambitious electrification target set by the government to reinforce energy security and sufficiency. As a result, Finland system operators estimate demand growth between 22 and 45% up to 2030, which will require a strong increase in generation. For instance, the system operators estimate the wind capacity will multiply by more than 3 times in the next 10 years, reaching 30 gigawatts by 2035. To secure the network investment required to support this growth, Finland has set a stable and predictable regulatory framework for electricity distribution until 2031, with attractive conditions, including an average return on equity around 8%, 100 basis points, to give you an example above Spain. The transaction will also have positive impact in our result and growth prospect. It will be accretive from the day one, and we expect a sustained long-term growth of around 7% per annum in the net income, thanks to additional investment up to between 200 and 300 million euros per annum. With further upside due to electrification, the expansion of data centers, and the possibility of the low 400 kilovolt transmission lines opened by the Finnish regulator earlier this year. Finally, given its size, its regulated profile, with supportive framework, and its cash flow generation, there is more than enough headroom for this transaction in our current credit ratios. All in all, this deal is an excellent opportunity to accelerate the execution of our strategy by increasing our exposure to regulated networks in a country with a high rating, attractive regulation, and significant growth prospect. Coming to the numbers of the presentation. Adjusted EBITDA increased by 7% to 8,050 million euros, supported by a stronger performance in the second quarter compared to the first quarter. Network adjusted EBITDA reached 4.2 billion euros in the first half, up 13% compared to 9% increase registered in the first quarter. In Power and Customer, registered in adjusted EBITDA of 3,100 million, up 1% year-on-year, driven by a positive dynamics in the second quarter. By geography, in the UK, EBITDA rose by 14%, supported by the higher contribution of transmission following the beginning of RIIO-T3, as well as a strong increase in production up to 27%, thanks to the onshore and offshore wind. In the US, excluding the one-off impact of networks past cost recognition in 2025, EBITDA increased by 6%, thanks to a higher rate in New York and Connecticut, and the contribution of the NECEC interconnection line between Massachusetts and Canada. In Brazil, EBITDA grew by 90%, driven by tariff increases in distribution and the new transmission line in operation, as well as the good performance of Power and Customers. In Spain, EBITDA is up by 2%, thanks to a strong hydro output, mainly from pumped storage, which has allowed us to increase production and maintain our reservoirs close to record level of 73% of the total capacity, equivalent to 8,300 gigawatt-hours of energy stored. Finally, the EBITDA in other European countries and Australia was affected by the impact of ancillary service costs in Portugal and the sale of our onshore activities in Hungary and France, despite an overall 12% increase in production, mainly in offshore in Germany and France. All in all, 83% of our EBITDA comes from A-rate countries. Regarding FX evolution, the depreciation of the dollar and the pound against the euro has a negative impact of 106 million euros as of June on our operating result. This means that excluding this effect, the increase in EBITDA will have reached 9%. Investment in the first 6 months were up 25% to 7 billion euros, with 72% in the UK, the US, and Brazil. 30% of the total investment were made in UK, mainly in transmission and distribution networks. 70% in the US, with increasing investment in distribution and offshore renewables, offsetting the completion of NECEC and Big Wind 1 projects. And 25% in Brazil, including the acquisition of Neoenergia minorities. Spain represented 14% of the total investment, in Australia, other EU countries remaining 13%. By businesses, network continue to be our main investment destination, accounting for nearly 2/3 of the total. To reach 4.4 billion, up to 42% year-on-year, mainly driven by U.K., which represent one-third of the total network investment after 43% increase driven by transmission. The U.S. account by 22% of the total as ongoing investment in distribution partially offset the impact on CEC project when it's completed. The contribution of Brazil reached 40%, including 1.1 billion euros due to the acquisition of minorities, as mentioned, and Spain represents 7% of the total investment. As a result, our regulated asset base rose by 11% year-on-year to 55 billion, thanks to the double-digit increase registered in the U.K., U.S., and especially Brazil, where RAB rose by 18%. Transmission was once again the key growth driver, with RAB up 30% in just 1 year, driven by RIIO-T3 in the U.K. and CEC in the U.S. and the completion of the last transmission loads in Brazil. Distribution RAB increased by 6% to 40 billion euros, well spread among geographies. Investment in renewables reached 2,234 million euros, with 72% allocated in wind, including 700 million in offshore, mainly in East Anglia 2 and 3 in the U.K., Windanker in Germany, and Vineyard Wind 1 in the U.S., and more than 900 million on onshore wind, mainly in the other European countries and Australia. We also invested around 330 million in solar PV and 300 million in storage and others. All in all, up to June, we have put in service 1,600 megawatts. And we expect to accelerate the additions of capacity from the second half of the year, supported by the demand growth and the strong appetite for PPAs. As a result, by the year end, we will install 2.1 gigawatts, more than 50% East Anglia 3 offshore wind farm in the UK, and we have another 2.2 gigawatts already under construction, two-thirds in US and UK, plus 3 gigawatts more ready for final investment decision in the coming months, half of them in the United States, mainly corresponding to repowering and life extension. Another 4 gigawatts in advanced development that could be ready by the end of the decade. This means the capacity addition by 2030 can reach up to 15.5 gigawatts, significant uplift versus 9.5 gigawatts between 25-28 included in our plan. This increase in trend investment is also being reinforced by governments and regulators who are taking additional measures to secure the availability of power and the reliability of network infrastructures, to obtain all the benefit of electrification in terms of energy security, self-sufficiency and competitiveness. In the European Union, only in the last few weeks, the Commission has published an ambitious grid package to increase networks investment through faster permitting and additional incentives. And the Electrification Action Plan, which sets a specific electrification target of 46% by 2040, doubling current levels in just 50 years, which could also mean multiplying total demand by 2 in the period. The plan announces measures to incentivize heat pumps, electric vehicles, and charging infrastructures, and propose the elimination of subsidies to fossil fuels and a strong reduction of taxation in electricity, in line with several Commission recommendations and taxation recently published in the UK and United Kingdom. RIIO-T3 continues progressing as scheduled, with observed framework decision already published, and the independent system operator has issued an updated plan beyond 2030, showing that networks investment will continue to increase strongly in the next decade. In Brazil, following the renewal concession for 30 more years, Neoenergia doubled its investment plan in distribution in the next 5 years to 50 billion, which represent 9 billion euros. Mainly in Bahia, where a few weeks ago I could see personally a huge increase in power demand, driven by the electrification of the western part of the state and the industrialization of agriculture and other sectors. In the U.S., new rate case progress as expected. For example, in New York, where the regulator recently approved $2.2 billion investment for this year and confirmed the new tariffs we expect to close by year end will have retroactive effects in May. And in Australia, we continue to see full support to electrification from federal and state authorities are reflected in new auctions in generation, storage and transmission. In terms of financial profile, our FFO net debt ratio reached 22.4%, and net EBITDA is 3.5 times, fully consistent with our BBB+ rating. And our liquidity stands at 21.5 billion euros, covering 20 months of financial needs. As you know, our last AGM approved a dividend per share corresponding to 2025 result of 0.685 euros, equivalent to total dividend payment of 4.5 billion, 12% more than previous year. Accordingly, next Monday, we will pay 0.427 euros per share as supplementary dividend. The average vote received in AGM was 97.9%, with a quorum of 73.6%. Let me also thank you all, our shareholders, once again for their participation and support. Now you, Pepe, explain the result in more detail. Thank you.
Thank you. Thank you very much, Chairman. Good morning to everybody. The first half reported net profit grew 22% to 4,336 million euros, and the adjusted net profit grew 8% to 3,565 million, supported by a 7% increase in adjusted EBITDA to 8 billion euros. Since last year, the dollar has depreciated 6.8% against the euro, the pound 3.1%, while the real appreciated 4.6%. As a consequence, FX has had a negative impact on the P&L. Excluding it, as the chairman has commented, adjusted EBITDA growth would have reached 9% and adjusted net profit growth 14%. The adjustments to the reported P&L, which are limited and aligned with our guidance definitions, are the following. First, regarding Mexico, in accordance with IFRS 5, Mexico is classified as discontinued operations. Therefore, its contribution is excluded from the EBITDA in both reported and adjusted results. At the net profit level, Mexico is presented under discontinued operations in the reported accounts, while in the adjusted figures, it is reflected on the equity line. As a consequence, in the second quarter, we have excluded the positive capital gain of 950 million euros from the sale of the remaining business to Cox, which is the main driver of the difference between reported and adjusted net profit. Second, as usual, UK capital allowances are adjusted at net profit level in 25 and 26. Finally, US past cost recognition in 25 is excluded from the adjusted net profit of that year, 530 million euros gross, 389 million euros net, in line with the definition applied in our 25 guidance. You can find all these effects explained in more detail in the annex on slides 32, 33, and 34. Adjusted revenues increased 4.2% after adjusting the recovery of US past cost in the first half of 25. Procurements rose by 4.8%. This resulted in a 4% increase in adjusted gross margin, improving the 1% decrease reported in March. Excluding the negative FX impact, 220 million euros, adjusted gross margin would have grown 6%. First half net operating expenses are 1% lower year-on-year and 1% higher excluding the FX impact of 71 million euros. E&W is included for the whole first semester versus last year that was accounted from March onwards. Net personal expenses increased 7.7%, as the second quarter of 25 included some positive non-recurring impacts. External services grew 2.6%, and other operating income improved by 40%. Analyzing the network business, its adjusted EBITDA grew 13% to 4,213 million euros, driven by a strong performance in all geographies due to higher asset base, especially in the US, the UK, and Brazil. Excluding also 53 million euros FX impact, adjusted EBITDA would have grown 14%. These investments in networks are making electricity available for households and industries, which is critical for the future of the economy and the energy independence. In the U.S., IFRS adjusted EBITDA increased 19% to $1.2 billion, excluding the $550 million passport recognition booked in the first half of 2025, included in the reported figures. Underlying performance benefited from higher rates in distribution and a stronger contribution from transmission, including NECEC following January COD. In the U.K., EBITDA increased 24% to 924 million pounds, with increasing contribution from transmission, driven by the new RIIO-T3 framework in place from April 26 onwards, and higher contribution from ENW versus last year as consolidation started in March 25, while in 26 is consolidated for the whole first half. In Brazil, EBITDA grew 7.1% to 7.2 billion Brazilian reais, improving from the 0.7% decline reported in March, driven by higher revenues in distribution due to better tariffs and demand, together with a higher contribution from transmission. In Spain, EBITDA increased 7% to 154 million euros, driven by the new regulatory framework and adjustments from past years. First half 26 power and customer business EBITDA reached 3.8 billion euros and grew 1%, improving 3% fall at March, thanks to the Spain and the U.S. During the semester, Iberdrola produced 61 terawatt-hours of electricity, with a 92% sourced locally and fully emission-free, advancing in the energy self-sufficiency while strengthening the availability and the reliability of supply. This demonstrates the importance of combining local generation and robust networks to provide the secure, resilient, and competitive energy system needed by the new economy. In Iberia, EBITDA was 1.9 billion euros and grew 1.5%, improving the 3.2% fall in March, with higher electricity sales and margins in Q2 more than compensating the lower prices, higher ancillary costs, and the negative contribution of the regulated gas rate. As of June 30, Iberdrola had 8.3 terawatt-hours hydro reserves. Pumping represented 35% of hydro production and should continue to help the results in the second half of the year. In the UK, EBITDA increased 11.9% to 774 million pounds, thanks to higher wind resources, both on onshore and offshore, more than compensating lower prices. The supply division had a positive contribution despite the smart meter sale. In the US, EBITDA increased 3.5%, reversing the decline reported in March to $525 million, with higher contribution from wind and solar assets, with stronger prices and output more than offsetting the negative timing effect versus 25. In the rest of the world, EBITDA decreased 18% to 337 million euros, affected by the sale of Hungary and France, lower power prices, and higher ancillary services costs in Portugal. In Brazil, EBITDA increased to 661 million reais, with higher contribution from the client business, partially offset by lower renewable contribution. Depreciation and amortization and provisions grew 2%, reaching to 2,824 million euros. The evolution was mainly driven by the larger asset base and provisions. Adjusted EBIT grew 10%, improving from a 1% decline at March, reaching 5,226 million euros. Excluding the 52 million euros adverse FX impact, growth would have reached 12%. Net financial results increased by 508 million euros to minus 1.1 billion, mainly driven by the negative derivative impacts, especially in the second quarter, reflecting the Q2 25 East of Anglia 3 positive one-off of 282 million euros, and FX hedges linked to exchange rates, as they were positive in 25 and negative this year. All of this is despite the 2.8 billion euros lower average debt. Debt costs increased 44 basis points, mainly reflecting higher interest rates and higher percentage of debt in Brazilian reales, which is linked to inflation, compensated at the EBITDA level as revenues in NEO are inflation adjusted. Excluding the real, debt cost fell 3 basis points to 3.5%. Net debt increased 3.8 billion euros versus full year 25 to 54 billion euros, mainly reflecting the higher rate replacement and currency appreciation. The evolution also reflects the strong effort in CapEx, including a 1.1 billion euros acquisition of minority shareholders in Q2, partly offset by FFO generation and asset rotation proceeds. Iberdrola maintains a strong and resilient credit metrics, fully supportive of our BBB+ Baa1 rating. This financial strength allows the group to continue investing while preserving balance sheet flexibility. Our adjusted net debt to EBITDA remained at 3.5 times. The adjusted FFO versus adjusted net debt reached 22.4%, and our adjusted leverage ratio was 45.3%, improving the 46.8% in the first half of 25. First half 26 adjusted net profit grew by 8% to 3,565 million euros, compared to the 3,308 million euros in adjusted net profit in the first half of 25. Excluding the 190 million euros FX impact, adjusted net profit would have grown by 14%, while reported net profit grew 22%. The difference versus adjusted net profit is mainly explained by the 1 billion euro capital gain from the Mexico transaction recognized in Q2, partially offset by capital allowances in the UK. Neo minority shareholder purchases had added 164 million euros to the net profit. And now the chairman will conclude the presentation. Thank you.
Thank you, Pepe. To conclude, the strong performance of the first half and the very good prospect for the next 6 months reinforce our positive outlook for the year. As of June, all our businesses has a positive evolution, especially in the second quarter, with networks EBITDA growing 13%, thanks to a higher regulated asset base and tariff increase in all geographies. And power and customer EBITDA is already up year-on-year, thanks to 3.5 gigawatts added in the last 12 months, higher production, and the contribution from pump storage. And we expect this strong trend will continue in the second half of the year, driven by a further increase in our regulated base in networks, mainly in transmission, the positive impact of new regulatory framework like RIIO-T3 in the UK, and the full contribution of Nenergia at net profit level after the acquisition of minorities. In power and customers, we expect to have 2.1 new gigawatts before year-end, and hydro reserves are still close to record levels. On top of that, 100% of our expected energy is already sold, and we continue optimizing our margin through pump storage. We will also benefit from additional operating efficiencies and ongoing improvement in business processes due to artificial intelligence, as well as from more favorable evolution of foreign exchange. All in all, this allows us to comfortably reaffirm our guidance of growth above 8% in adjusted net profit in 2026. And if the positive trends of the second quarter continue in the coming months, we could give you some good news after summer. And as we have shown today, we are already working to continue exceeding our outlook for coming years, thanks to the acceleration of organic investment in networks in the US, the UK or Brazil, and in power, mainly in the US, additional efficiency gains and process improvement linked to artificial intelligence. As well as the integration of Caruna announced yesterday, will reinforce our network profile in AA plus rate country in the Eurozone with attractive regulation and strong growth prospect. The transaction follows the same rationale that we have already applied in the last 25 years as long-term industrial investors, and we have always demonstrated our capacity to materialize our value creation expectation. Now we will be more than happy to answer your question you may have. Thank you.
The following financial professionals have raised the following questions. First, Dominic Nash, Barclays, Philippe Ourpatian, Oddo, Rob Pulleyn, Morgan Stanley, Sky Landon, Rothschild, Peter Vistiga, Bank of America, Jenny Ping, Citigroup, Alberto Gandolfi, Goldman Sachs, Fernando Garcia, Royal Bank of Canada, Jorge Alonso, Bernstein Societe Generale, Ahmed Farfan and Arturo Murua from Jefferies, James Brand from Deutsche Bank, and finally Javier Garrido, JP Morgan. The first one is, could you walk us through the main drivers behind net profit growth in the first half of 2026 and how much of that performance is sustainable for the rest of the year?
So I think perhaps the first one is business drivers. Networks has a higher RAB in all countries. We have a strong performance in the UK, in the US and Brazil. In the UK, we have higher contribution from Electric West, consolidate since March 2025. Increasing contribution from transmission, started RIIO-T3 in April. In the US, higher rates. Contribution of NCEC interconnection between Canada and Massachusetts from January. And in Brazil, increasing revenues in distribution to the better tariff, and a higher contribution from transmission after finalizing all lots in the recent revision of rates as well. Power, higher production in the UK, US, and European countries. And we expect this trend to continue the rest of the year. In Iberia, we have a strong hydro production, especially in pumped storage. Already, as Pepe mentioned, is represent close to 35% of our total production, with an improvement in margins. Positive impact of the 100% acquisition of Energia. So that makes the adjusted net profit 8% or 14% excluding FX impact. And as I was mentioned, if the trend continues, perhaps after the summer we can give even better news for you.
Second question, what gives you confidence when reaffirming your 2026 net profit guidance, and what are the key operational drivers for the second half?
I think it's same thing I mentioned. I think we expect positive dynamics in second quarter that will continue the rest of the year. In network, the regulated asset base continue increasing. New frameworks with better rates in RIIO-T3 from April, better tariff for countries, additional contribution from Energia full year. In power, we have installed 1.6 GW during the first half of the year. We put an additional 2.1 GW in operation before the year end. 100% of the energy is sold. Hydro reserves at the record levels. Pepe mentioned 8.3 GWh. Improving margins to the pump hydro, the volatility of the price helped to us. Improving effects, we expect improving effects dynamics as the negative impact recorded in the first half. And additional operating efficiencies was mentioned. So that's why I continue repeating that we are comfortable reaffirming our guidance for more than 8% growth in the net profit. And I think if this positive trend of the second quarter continues in the coming months, we could give you some good news after summer.
Next question. Despite that we are receiving some questions about the announced acquisition of Caruna that were mostly answered yesterday during the call. However, could you please comment generally on the strategic rationale, why entering Finland right now, implied multiples, and what gives you confidence that the transaction will create value for Iberdrola?
So this transaction follows the same rationale as the acquisition of other network companies like Scottish Power, Energies, US or Electric Brazil. We are a long-term industrial investor. We are not already an speculative investors. We see opportunities, the problem another one are not seeing. As we have demonstrated, in these opportunities we are seeing, we are able to materialize. That's already happened in cases like in UK, you see the good result, or US or Brazil. Additionally, we are financing this transaction with the funds and the capital gains obtained from the sale of our thermal generation in Mexico. We are changing money from one country to another one, in a country in power generation, fossil power generation, into clean networks operation regulated. The transaction as well will be accretive since the day one, which I think is not normal in this type of transaction. and the company expects net profit to increase by 7% per annum, given the predictable regulatory framework and the investment plan up to 2031. Overall, I think that is a relatively small transaction compared with our one organic investment. I think we are investing on the range of 14 billion-15 billion per annum, so I think that represents less than 5 billion, which I think is relatively small compared with the rest.
We have another additional question regarding the treatment of the shareholders' loan in the deal of Caruna that is direct to Pepe.
Pepe, you reply that one?
Yeah, well, I think it's quite simple, no? So Caruna has a net income, and after the net income that we are expecting it to be around 150 million euros in 27. After that net income, it pays a shareholder loan. And now with the acquisition that we do, especially of the 80%, that shareholder loan will disappear, no? So it will be a net income. We will have the 80% of the net income. So, I mean, after the shareholder loan, what you are seeing is a net income, but we are looking to the net income, which corresponds to the equity that we are putting there, and that is what justifies the 16 times that we are paying.
Next, can you provide an update on your artificial intelligence initiatives and quantify the expected impact over the time?
I think that is
artificial intelligence number 8.
Well, yeah, okay. I think we are progressing in the implementation of the initiative we already presented you, as well as on others. There are around 300 projects in this moment in production at the final development stage. We have another 150 projects progressing. We are training now thousands of people, probably more than 4,000. And we expect that the value of all this initiative will be measured in the hundreds of millions, and you will see that one in the next month. So I think that is going on.
Next, where do you see the main upside opportunities versus your current business plan?
So let me. So you asked for
the
main opportunity.
Upside.
Okay. Yeah. See, I noticed. Yes. We are already better than our plan in terms of investment and results. Just to give you a few examples, in the UK, RIIO-T3 final determination, it was better than planned and expected. We higher TOTEX is 12.1 billion pounds, with a better return and faster cash flow recovery. In the US, the higher demand is driving additional investment in infrastructures. For instance, we are already in this moment in transmission with the project of Power in New York, which is a project which includes 4.2 billion capex. In generation, in United States, repowering, life extension, new asset, our plan includes around 2,000 new megawatts in 2025 to 28, but we have already installed 1,400. We have another 800 under construction, 450 more we will be installing in 2028. That means that is 30% more above our plan in the U.S. And on top of that, we have another close to 1,800 megawatts project which be installed by 2030, in which we are signing PPAs with higher prices and longer duration. And finally, in Brazil, the fact that the renewal of concession, we had already committed to make investment of 50 billion reais, which is around 9 billion euros, which is nearly doubling the investment we make in the last 5 years with a very attractive returns. In any case, I think we are working in our review our long-term plan, and we will share you the information in the next Capital Market Day that will take place next year as usual.
Next is regarding the new U.K. government and its implication for Iberdrola's U.K. operation and investment plans.
Andy Berman is not new for us. As you know, we know him from his times as mayor of Great Manchester. We had the distribution service where we have the distribution service area. We have already worked very well with his team. So I think the key priorities announced by Andy Berman are absolutely aligned with our plans. The fact, yesterday the government already announced the elimination of VAT and electricity, not in gas. So, which I think that is what the European Union is saying, and that is what we've been claiming for years. So if we would like to electrify, we have already make the things in a manner more attractive. So we need already availability, reliability, but affordability. The key thing for affordability is precisely tax reduction of electricity. So that is what they are doing. So we are aligned very much with our plan, and I think we know well his team, and I think we have already worked very well from our position as a distributor in the Manchester area, where he was already the mayor in the last few years.
Next question is regarding Brazil and our announcement about new investment plans and what returns do we expect for those new investments, assuming the extension of the concessions.
So, as you know, we are the largest electricity distribution in Brazil and the leading investor in the Brazilian sector. I mentioned before, I was a month ago in the western part of Bahia with the Minister of Energy, with the Vice President of the government, with the Minister of Agriculture and others, for announcing precisely this extension of the concessions of different places. And I think the Minister was already very positive in the trends and the ambition of the country to electrify areas which now they are not enough electrified. So, and that other areas certain is this booming area of Bahia, same than others, but I think that was in Bahia, in the western part of Bahia. And I think the trend of our of this capex will continue, the electrification will continue, and that allow us to double the level of investment we've been making up to now. And as you know, the returns there are quite very attractive, with ROEs on the high 2 digits, and very positive regulatory framework, very stable, very predictable, with rules that we know very well from the more than 20 years we have present in the country.
Next, the latest news about the Spanish blackout.
So we have not changed our positions in the day one. So as I mentioned, any time, I am an electrical engineer, and I can tell you the blackout was the result of inadequate planning, management and operation of the electricity system by Red Eléctrica was not the adequate one, with a lack of synchronous units programmed despite the fact they were available. I think I can understand the blackout if they are not power available. If they are 4 times more power available than that what is needed, it's difficult to be understood. The only reason is the system operator has not either planned properly or has not managed properly during the day. Our position is, I think that is the position that has been taken by all reports, investigation, audios, etc., etc. And the fact, and I think that is very clear, after the blackout, Red Eléctrica has decided to modify the system operation to program more synchronous units. So I think that's very clear. So what I was saying from the day one now is being applied. There are another thing as well, with the CMC, the regulator, has published a report last May, pointing that there exists a conflict between the role of transmission network operator, which is a listed company, and that may overestimate infrastructure needs or prioritize investment with a higher expected return, and the role of the system operator, which must ensure the optimization of the available resources, focusing security of supply. I think that is not my word. That is the CNMC, the regulator, has already talking about this conflict between transmission owner and system operator, which are two different things. The role, as the fact, is separating in other jurisdictions where we have already presence, like United States, UK, or Brazil. And I'm sure that probably that had not been together, probably what we are talking about, we will be in a different situation.
Next is regarding more color on our renewable portfolio in the U.S., especially regarding repowering, life extension, and possible new PPAs.
So, as I mentioned, we are investing in the U.S. more than initially planned, driven by the increase in demand and the good condition of the PPA market. As I mentioned, we have more than, perhaps Pedro, you can already reply the details of that one. More than 800, I think, megawatt in construction, but you can already.
Yes, I think we have more than 800 megawatts right now under construction, and we expect, more than 2,200 megawatts that could be operating by the end of 2030. This means more than double our plans in the U.S. Many of these projects are related to life extension or repowering, which have attractive economics and reduce complexity during construction, permitting, etc. I think we're building a strong portfolio beyond 2030 that will be explained later. And some competitors is talking about increased capacity in the U.S. In our case, I can assure, and I think that's the work we're doing, that all our projects are real. We supply chain secured, including turbines or solar panels, so we do not need to buy projects from third parties.
Next is regarding the new U.S. cases in the rate cases in the U.S. If we can provide some update on the timing of these processes.
So I would like to say that we are in usual negotiation processes that will probably continue until the year end or beginning of next year. So I mentioned already, for instance, New York, we already agree with the regulator the level of investment and the new tariff, and the new tariffs will be retroactive to May, as we had already done in the past, and we will continue negotiating the rest of the time. So I think that is the normal way how we work. I think we work, we negotiate, and whatever things we agree has already retroactive from the date with another rate case is passed.
Next is our view on batteries included in our strategy. How do you compare those opportunities with your existing pumping hydro portfolio?
The pumping. So we started 25 years ago investing massively in storage. I think I remember 2001 when we presented our first business plan. I was saying that we plan to make at that time a few thousand megawatts of 4,000, if I don't remember bad, of renewable. I think mostly in wind. And we said that the renewables are intermittent, so it's needed storage for storing the excess of electricity when there are not enough demand, and for providing this electricity when that is needed. So that makes ourselves to transform most of our hydroelectric power plants in reversible. So the fact today, we have 4,400 megawatts of hydro pumping storage, with a capacity between 20 and 100 hours, each of those, which makes a total capacity storage on the range of 120,000 megawatt hours, so which is a huge capacity. Also, I think we are investing in batteries. As you know, I think I'm coming from the sector of batteries. I spent 70 years of my professional life designing, manufacturing, and selling batteries worldwide. So we're not lithium batteries, we're nickel cadmium, or we're lead acid batteries. But I think I'm very familiar with batteries because it's part of my background. So we are investing in batteries, especially in market where we have no possibilities of making hydro pumping. So in countries also we have attractive regulatory frameworks. For instance, in Australia, We have already 320 MW, which is 640 MWh installed. Another 270 MW, which is 150 MWh under construction. We have some mature project as well for another one with 100 MW of capacity. In U.K., we have as well an installed battery with 250 MW, which has a capacity of 200 MWh. And we have a quite long developing pipeline. In U.S., we installed the first battery storage project in this moment in Oregon, with 80 MWh, and we expect to start others as well soon. In Spain, we are the leader, so we have 212 MW installed, with this 420 MWh and 245 MWh under construction. So I think we are in countries. But I think if we compare all these numbers, which is few hundreds of megawatt-hour, compare with the capacity we have for the hydro pumping, is peanuts. So I think 120,000 megawatt-hours is equivalent of 60,000 MW of normal batteries of 2 hours capacity, of 30,000 MW of 4 hours capacity. It's a huge capacity, and that is what we are already the reason why now in this moment almost 35%, 40% Pepe mentioned of our hydro production is coming from this pumping storage. But that is the consequence of a decision we took 25 years ago when we started already the new times of the company.
Next is regarding to the net debt expectation for the end of the year.
The net debt is probably going to be around 56 billion. Basically, it's slightly higher than we had in the plan, but driven by the appreciation of the currencies from the beginning of 25. Although the currencies, the dollar, especially the dollar and the real, are lower than the average, are lower than last year, they are higher at the beginning of this year, no? So that is having already an impact in the debt, as you can see in the presentation. But on the other side, it would be good news for the FFO generation for 2027, no? So this is more or less around 56 billion where we are expecting to close the year.
Next is the performance of the retail business in Spain, particularly in terms of customer retention, competition, and regulated cost impacts during this year.
Pepe?
Diego, Pedro. Okay. I think we remain the market leader in terms of energy supply, but also in terms of the customer portfolio. Much lower rate than any of our competitors, especially new entrants, which basically means a strong customer retention. I think we have a good evolution of our portfolio, the customer portfolio, including NIBA, our second brand. I think we continue to add products. Let's not forget what the chairman mentioned in his presentation, which is that we've been impacted, both in Spain and Portugal, by the additional cost of the so-called reinforced system operations by Red Eléctrica, in addition to other impacts due to regulated gas tariffs in Spain.
And the last one is how do you balance the need for great investments with affordability concern in the US and in Europe?
So I don't know if I mentioned before, we know that the key issues today in most countries for regulators and government are availability and reliability of electricity. So availability is to have sufficient power and infrastructure. So I think you see in the United States we have huge demand, people knocking our door for extending life of the existing asset, of investing in new ones with long-term PPAs, even longer than before, so with higher prices. And reliability, I think most of the equipment which today are installed, I think they need 24/7 service. So that means we need a grid more robust, more resilient, and with better quality of service. I think that is the two drivers. That will require this massive investment, mainly networks, as recognized by several governments, I think recently by European Commission. There are a special directive related to networks, so which I think is absolutely new, because traditionally make directives about clean energy, about renewable, etc. It's especially made for the need of networks in all countries for achieving this availability of energy reliability. If we go to reduce electricity price for consumers, the easiest and fastest way is to reduce taxes and charges than to dare incur the energy bills, the electricity especially. And that is what the European Commission is recommending. And that is the first measure taken by the British government. So I think the taxes which are in most countries supported by electricity, especially in Europe, are huge. Probably close to 50% of the energy bill is related with taxes and charges, which is much higher than the fossil fuels in countries where they are fully dependent on the imports. So we are penalizing the local production for subsidizing or penalizing less than one which imports. So it's absolutely needed to revise the taxation of electricity if we would like to electrify the economy, if we would like to have the availability of power which is needed in most countries, the reliability of the grid for making a grid more robust, more resilient, and with better quality of service to provide 24/7 service to the citizen in the best condition. That is what the European Commission is dictating. That is what the British government is doing. The first decision they took, reduce taxes for electricity for electrifying the economy.
And with this last question, I now hand again the floor over to Mr. Galán to close the event.
So thank you very much for taking part of this conference call. As always, our investor relations team will be available for any additional question. If we have not already opportunity of meeting ourselves before, I wish you an extremely good summer, good holidays, and I hope that after summer we can give even better news for you. Thank you very much, and relax a bit. Thank you.